How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for September 19, 2017. So here is the report that I posted. Here's all the data. Alright, and so let's get into gold. Let's see what the institutions are doing with gold. So as of last week, we saw that the institutions were increasing their gold exposure to a high of 351,000 positions long. And so this past week, what they did was they decreased their long exposure by about 20,000 positions. So we can see that price dropped because of that reduction in long. So profit taking on longs causes a drop in price to this weekly area of demand that we're hitting. Now remember, this weekly area of demand is nested within this area of monthly demand, which has yet to consolidate away from this area. So it's not a very good area of demand simply because of that. But if you take a look, long exposure is still definitely very bullish. So I'm looking to take confirmation trades off of this area to the upside, because I do believe we're going to see reaction from here to the upside. It's just I'm not going to blindly buy gold down at this level because it could potentially drop even lower. But I don't think that's going to happen. So I'll be looking for confirmation trades. Actually, I should draw a line like that and see how that reacts. Something like that. So I will be looking to get in long on gold on a confirmation type of trade, because the data, even though there was a reduction in longs, it's still very much aggressive with the bulls. Alright. So what do we see with oil? So they increased their long exposure by about 15,000, 16,000. And they decreased their shorts significantly. Take a look. They used to have 288,000 positions geared to the short side, and they dropped that by about 28,000 positions. Okay, so 28,000 positions. That takes the short exposure from aggressive to a more neutral stance. Okay, and that's as we get this big push upwards, breaking through the weekly supply that we've been waiting for quite some time. So ideally what I'd like to see is a drop like this, and down here I'd like to take longs. Okay, this would be the ideal situation. But that might not happen simply because we are now going to enter in a tested weekly supply zone. So the fact that it's already been tested means that there isn't that much supply to force price downward. So it may not happen. So I'll be looking for daily demand zones to take long, and if those break, then I'll be waiting for trades down here at this weekly area. Coloration of the cells, we're starting to enter a slight bullish bias, and so this is good. We came out of this neutral territory with the breakout. We're entering bullish, and net positions are up from 374,000 to a positive 418,000. So definitely the institutions are looking to take oil upwards, and after breaking through the supply, there really is nothing to hold it from moving upwards now. So looking for long entries on this pair right now. Okay, US dollar, what do we see here? US dollar was, after a big drop, consolidating. Question was, are we going to get a drop from here, or are we going to get a rally from here? Looking at the technicals, there's nothing to make it bounce up. And if we look at the data, shorts were increased, longs were decreased with this candle of consolidation. So what does that tell you? They were offloading longs and piling in some shorts while they were consolidating. So chances are we get a move to the downside right here. Coloration of these cells here, bearish, and an increase in the positions from a negative 2.1k to negative 6.2k. So bearish bias continues, and expecting a drop like this to the downside. Alright, so in terms of the Aussie, we see they increased longs by about 1K, but they decreased shorts quite significantly. About 21% of their short positions they've closed out, and now shorts have entered into a cooled off territory. And that comes as we get a rally, a base. Next move is the rally after the pause. So long exposure takes a huge jump from 72% of exposure to 77%. Net positions increase from positive 63,000 to positive 72,000. So I'm looking for new areas of demand to get in long, because right now there's really nothing here in this area to get in. So I'm looking for new areas of strong demand to get into this pair. Alright, so now we have the US CAD. US CAD longs stay neutral, while shorts get added to and become even more aggressive. So becoming more aggressive, and this is as this candle consolidates here on the weekly. Consolidation, we get a move to the upside. Short exposure increases by 2 points to 71%. Net positions increase to minus 58,000. So this is basically moving along the lines of the US dollar. So what we see with the US dollar is that the institutions are getting in more short. What do we see with gold? The institutions are getting in more long. And so therefore we're also seeing the same thing with the US CAD, where the institutions are getting in more short. So I think from these areas where we're going to see a move to the downside, just like on the US dollar. If we go back to the US dollar, just like the US dollar consolidating as they're piling on shorts. I'm expecting a continuation downwards, probably not even a retrace up here, just probably a breakout to the downside. So very likely that we're going to get this drop from here. So I'm waiting for new areas of strong supply to be formed, and then I'll look to get in here. Let me see here, formed for me to get, yeah. So we'll look for new supply zones to be formed to get in. I wrote that in my notes. Okay. Swiss franc, not much to see here. Ugly chart. The only thing is we are testing this weekly supply or weekly trend line. So a move to the downside is probably what's going to happen here. But if you look at this data, it's neutral bias. There's no setups on the chart, so I'm not even going to pay too much attention to that chart. Euro. Longs pretty much remain the same, but take a look at shorts. Shorts increase from 105,000 to 127,000 positions. They still remain cooled off, but total exposure starts to become aggressive. Long exposure drops 5 points. Net positions drop from positive 86,000 to positive 62,000. So this is the only chart that really makes me start to think. But if I was expecting the institutions to drop price here, then I would be expecting them to add to their or close off their shorts and be adding close off their longs and be adding short. What we do see here is they're adding shorts, but they're not closing off longs, especially at these highs here. So why the increase in shorts? Well, it could have been just to get price to drop a little bit further for them to add more longs. It's a possibility. I think that we're just consolidating here before the next leg up. That's what I'm thinking. Unless next week shows me if we still consolidate, then next week's chart or data shows us that longs are starting to be closed out and shorts are continuing to be added, then I'll believe that we're going to get a move to the downside. But right now I don't see enough data to support the fact that that there's going to be a move to the downside, or the idea. So British pound, what do we see? Increase in longs, a massive decrease in shorts. Short exposure moves from 63% to 53%. We now have the coloration of the cells being green, so bullish bias. We have a break of the monthly area of supply, which is great. Nothing to hold back price now. We got this move, consolidation, and then a move to the upside is probably what's going to happen, since we're becoming more aggressive to the long side and we see this big drop in short positions. Big increase in longs, big decrease in shorts. Upward move is what I'm betting on here. So waiting for new areas of demand to get into this one long. I had an order open at a 4-hour demand zone to get in, but it missed triggering and just continued moving upwards. So we will see how this plays out next week. Okay, US dollar, Japanese yen. We're hitting a weekly area of supply. Okay, as we are rallying up into that supply, what do we see? Longs get closed off and shorts get added to slightly. Now, longs are becoming less aggressive, which is a good sign for shorts. And long exposure drops from 71% to 69%. Net positions drop from 57,000 to 51,000 net. So as price moves up, the fact that they're not adding to longs means that price isn't expected to go higher like this. We're hitting supply, they're closing off longs, adding shorts. I'm expecting a move down like this with the US dollar. That's what I'm expecting. Okay. And so we have the Kiwi, decrease in longs, increase in shorts. That's as we get this candle right here. Price moves up, hits the weekly supply, and now we got this reaction to the downside. Looking at the coloration of the cells, neutral. So what does that tell you? Don't place any trades. I wouldn't, because we've already tested this twice, but we are reacting from a monthly bearish engulf. You have monthly demand down here. I would take longs down here, but taking longs here in the middle is a bad idea. So either longs lower or break higher past this area, wait for this area to break and then take longs, or retrace to areas that broke it and then longs. But right now I'm not taking any trades on this one. Alright, so that is basically the data for this latest report. On Wednesday, I believe we have something coming out. Yes, New Zealand interest rate release on Wednesday. So that'll get things going for the markets on Wednesday. With the Kiwi, it'll finally get things to break out of this area here, either up or down. Looking at the data, there's no bias, so it wouldn't be a good idea to take any trades on this pair right now. I think longer term, we see price react and eventually break to the upside, but I don't want to set anything in stone right now. I want the data to support this. Alright, so that's it, traders. I hope you have a good week out there, and we'll see you next week.